I trade for only 90 minutes per day, and on the winning days I managed to make anywhere from $3,000 to $6,000, but it wasn't always like that, because for the first few years of my trading I was just losing and losing money. But then I figured out my own system where I can risk less than $100 of my money to make thousands and thousands of dollars. And all it takes is 3 simple steps. So if you have the skill and the knowledge, you don't really need big capital, because you can grow your capital over time. So in this video I'm going to show you the full strategy and the full system how you can start trading with less than $50. So let's get into the video. Alright, so in this video, as I told you, I'm going to explain to you how you can start trading with small and of course little capital. So of course we are going to go over the 3 steps, and this is going to be for everyone. So all of the people, whether you are a beginner and whether you are already trading for a few years, this video can help everybody out. So make sure to stick till the end so you understand everything and you can later on apply to the chart. And in this video we are going to talk about what to trade, so you're going to know exactly whether to trade futures, options, forex or crypto. So what to trade. Then we are going to talk about the exact profitable strategy that you will be applying to the chart, so by the end of the video you can apply it yourself. And then of course we are going to touch up on how you can grow your small account into something big and something serious. So trust me, this video is going to have it all. So what to trade, the exact model that you need to be trading, and actually how to grow your small account. So let's get started. But of course you need to understand I was unprofitable for years and years on end. So what happened to me is I lost thousands and thousands of profits. So you need to understand that trading is not a get rich quick scheme, so you need to completely get it out of your head and you need to follow the process so you can get to that point the fastest. So what the goal of this video is going to be is, if I went back to zero, what would I do to start day trading? So this is going to be personal guide that I would give to myself in the past if I wanted to do everything correctly. So it's going to be a profitable strategy that actually works that I'm going to give you guys out. It's going to be a growth strategy on how you can take that strategy, because the strategy without a proper way of trading it, applying it and growing it is going to be nothing. So a growth strategy. And then of course it's all going to be based on the rules, so you are not going to have any emotions in trading. So all you're going to do is you're going to follow the rules and you're going to apply the profitable strategy, of course, that is rules based, and all you're going to do is grow your capital. So what kind of instruments do we have to trade? So we have forex. So forex is most liquid market in the world. So of course it is the currencies. So of course there is a lot of liquidity in that market. But the biggest problem with forex is there is a lot, and I mean a lot of unregulated brokers out there. So it's really hard to trade forex with a regulated broker that is actually going to take your trades and put them inside of the market. So a lot of them are just going to be kind of scammy, and they are not going to be fully honest with you and how you get filled, and they're just going to stop out when they want to. So then we have futures. So futures are open 24 hours a day, 5 days a week. They are safe and easy for beginners. So futures, you're always going to be watching the same instrument and you are just going to kind of learn how is it exactly moving. And the biggest downside with futures, with trading futures, is that you can't hold position for days, and this doesn't really matter to us because we are going to trade for 90 minutes a day, so we do not really care about holding positions for days. Then after that we have options. Of course options are going to be safe options, they are similar to futures, and for the options you do not need a huge starting capital to start. Then we have crypto after that. So crypto is open 24/7 as you know it. It's really volatile. So the biggest problem with crypto is that it's driven by news and it is manipulated. So you probably seen those crypto dumps or pumps that you really cannot expect or cannot predict. So it is really volatile and it's going to be so manipulated, so it's not worth trading. So the best way that we are going to go with is going to be futures, and the way we are going to be going with is futures. So for futures we are going to have propfirms that are going to allow us to access huge capitals with as low as $30. So that is what we are going to trade. So let's take this really good trade for example. So of course it was within the first 90 minutes of the market open. So with this trade for example, how much we can actually make with it. So for example, if you are going to enter the market with one contract on this trade right here, you can see that the entry price was 25,017 and the exit price was 25,111. So that was exactly 94 point move. So every single contract in futures is going to be $20. So 20 times 94 means that on this position with a single contract we would make $1,880 in profits. So of course this is with only one contract, and of course if you scale to bigger contracts it's gonna be bigger profits and bigger numbers also. So let's talk about something that is going to change our game completely, and I mean completely. So we have the trader that is gonna trade the exact same model, exact everything, but he's not gonna know how to grow his capital. So let's say for example his 3 wins are going to be $1,500 on a funded account. So funded accounts are going to cost $30. So all you do is you pay about $30. Some firms are maybe more, some firms are maybe less, but you pay a $30, you pass an evaluation, and you get the access to the huge funds. So one trader, when he passes those funds, he's gonna get 3 wins, he's gonna make $1,500. So great, one prop firm account, first win was 500, 500 and 500, he made a total of 1,500. But the same trader with the same execution and the same trades is not gonna only trade one account, and he's actually going to grow his capital because he is going to trade 20 prop firm accounts. So for example, the same 3 wins right here, they were $1,500. Here those 3 wins are going to be $30,000. So imagine if funded account is costing $30. For example, you get that first payout that is going to be $1,500, and of course if you reinvest that all in the funded accounts, which is the smart thing to do after you make the first dollar from trading, all you do is you reinvest it into 20 prop firm accounts, or even more if you want. I'm going to show you exactly how you can do that. And then the 3 wins are not going to equal 1,500, but they are going to equal 30,000. So every win is going to be $10,000 because it's going to be timed by 20 accounts. And here's another example. So we have same trader, of course, different game. So same execution. You can see right here we have funded account number 1, which is $600 of profit. And right here we have the same funded account, which is account number 1, which is $600 in profits. So the smart trader is going to do this. He's going to take a trade copier. So a software, by the way, there is a lot of trade copiers out there, and what he's gonna do, he's going to take that trade copier and connect to another 20 accounts. So this trader that is really not smart about growing and getting the large capital to trade, he's not gonna do it. But the smart trader is going to connect his account to the trade copier. He's not going to do anything different, except he's going to put on the trade copier all of his other 19 accounts. And what is that going to result in? That is going to result in for $600 to be timed by 20 accounts. And what is that going to result him to do? It is going to result him to make 20 times more profits than the first trader above. And of course then one funded account, one winning trade, it's only going to be $600, which is of course not a life-changing money. But then 20 accounts with one winning position, that would equal $600 per account, would be $12,000. And I think for a lot of people this would be life-changing money to make on every single winning trade. So now that we know what to trade and how to do it exactly with growing it, we need to know what is the exact profitable strategy to apply on the chart to be able to do and to get these results. So let's start learning the model. So the first thing we are going to do is we are going to mark out 5 or 50 minute 9:30 a.m. candle. And of course it is going to be really simple. All we do is we go to the 5 or 50 minute time frame. 50 minute time frame is maybe going to be a little bit better because it's a bigger time frame and it is going to give us a better range. All we do is we wait for the first 50 minute time frame to close. What we do is we mark out high, we mark out low, exactly like here, and that is all we need to do for this step number 1. And why do we do that at 9:30, which is the market open? So after the 9:30 opens and the first 50 minutes, that is when the volatility kicks in the market. So you can see right here, this is before the session, and you can see how the market volatility is that, and then you can see after the 9:30 spike how the volatility spiked in the market. So there is going to be a lot more movement, which of course we like because we are going to wait for our model to present to then take it and of course catch a nice move to one direction. So right now the step number 2 is going to be really simple, but you need to follow me on this. The first scenario of step number 2 is going to be after we mark out 5 or 50 minute high and low, we need to wait for a breakout to either the upside or either to the downside. So this is a first scenario. So if we get a strong breakout to the upside and we manage to go back down and respect a fair value gap. And now what is a fair value gap? It is really simple. So a fair value gap is this hole in the market right here. You can see from the first candle swing right here to the third candle swing right here, there is just a hole in the market right here. So that is called a fair value gap or an imbalance. We also have one right here, but it is a lot smaller. And what we are going to do is, if we come back to that fair value gap, we are going to look for the respect of that fair value gap to then get an entry to the upside. But entry is not going to be on the retest, because we cannot know if the fair value gap is going to hold or if it's just straight going to fail and get us into a losing position. So I'm going to show you exactly how we are going to know whether the market is actually going to give us the entry to the upside after a retest. But that is the point. If you break out to the upside like this strongly with the candles to the upside and we retest a fair value gap perfectly, we want to look for the continuation to the upside. That is the first scenario. So really simple. But the second scenario is going to be if we wick to the upside, and if we do not manage to break to the upside, we are also going to wait for a certain entry model, which I'm still not going to show you because you are going to see it on the real chart, and trust me, it is going to make so much sense to you. So now that you know what exactly to trade and you know the exact profitable strategy, now we are going to go on to how to apply to the chart so you can actually start growing that small account, and I'm going to show you what the profits would look like, for example, on a funded account if you want to grow it. So I am on the chart right now, and you can see that this right here is the market open. So this candle right here is going to be our market open, and of course if you count the candlesticks, you can see that we made a 50-minute move. So from the market open to right now, there has been a 50 minutes. So all we do is we are going to go to 50-minute time frame, and we are going to mark out high and low of the 50-minute time frame. So if we mark out low like this, and if we mark out high like this, we can have our range that we want to trade. And also if you look to the left, as I talked about, we have a fair value gap that is still respecting to the upside. So my kind of expectation, since we are already respecting this fair value gap, is for a move to the upside to happen. But let's just wait and see. So that if I scale down to, let's say, 1 minute time frame, and we wait for some kind of breakout or some kind of sweep to happen, if I fast forward the market, let's see. So right now we swept the downside. So after we swept the downside, since we swept it like this, we did not break out below it. If you broke out below it, we would look for some kind of continuation towards the downside. So after we had the sweep or the breakout, now we know that it's the scenario number 2. So we have the sweep, and now we want to look for the continuation towards the upside. All we are going to do, and our specific entry model, is going to be to enter based off of a disrespect of the fair value gap. So we have a fair value gap right here, for example. This is the last fair value gap created while going towards the downside, and if the market manages to close above this fair value gap, so somewhere right here, what we do is we are going to enter the long positions, because the market then showed us that it does not want to respect that fair value gap and continue going towards the downside, but it actually disrespected it. That means that it wants to expand to the upside. So let's see the next candle closure, and you can see exactly what I said. So if I enter the long position like this and put my stop loss, let's say for example underneath the body of the candle, what we do is we target something to the upside. So it doesn't need to be this range, but we can target whatever high to the upside we want. So for example, if we target this biggest nicest high to the upside, because we always want to target high or low in the market. And now if I play the market forward, for example, let's see what will happen. So you can see, like, within a 15 or 16 minute time window, we made a 2.4 risk to reward. So I just want to give you an example. 2.4 risk to reward. If we were risking a $500 with a funded account, this was the result as to make about $1,200 on a funded account. Now just imagine if you scale that to 20 accounts. I don't even need to tell you how much you would make, but you already know that that is huge numbers. And of course, you maybe don't need to risk, let's say, $500, but you can also do a smaller risk, for example a $300 risk, which of course with 20 accounts it will result in a massive profit. So before I show you more examples, if you like the video till now, make sure to like and also make sure to subscribe so you do not miss any other videos, and that just makes me know that I'm doing something right. So let's go into the next example. Okay, so here we have another high and low of the candle. So if I mark it out, you can see that in the market right now it is beautifully aligned, that right here we have also a fair value gap, same as the last time. So if I mark it out and if I spread it out to the right, you can see that we are already retesting it. So also my some kind of thought is that we are going to continue going to the upside because we just go based off the fair value gap. So if I scale to the lower time frame, which is going to be 1 minute time frame, let's see which side is going to get swept first. So of course it was probably this side because we were already really near that low. So for example, if we want to long the market, so you can see how we just swept this, the only way that right now we are going to get the opportunity to long the market is if we inverse this fair value gap right here. But you can also see that right here next to it we have another fair value gap. So what is the case probably going to be is that we are either going to close to the upside, but we are already going to tap into this one. So what we want to see for this example is to close above both fair value gaps to enter to the upside. And since we already have the confluence of a 15-minute fair value gap right here, that is going to be a really high probability long in the market. So let's say for example, if you are going to get the trade, so there is the entry right there. So you can see when we got the closure above it, that is where we enter the trade. Now we are going to put our stop loss somewhere below these fair value gaps. We can put it right there, and what we target is this high up here. So now for example, we can also monitor the price for maybe some more entries in the market. So if I fast forward the market, you can see that we are just steadily going to the upside. Now we came back. What we actually did right here is something really nice. So if I move this position to the left, that is still ongoing. If I remove these fair value gaps that are confusing us, you can see that right here, after we broke out to the upside with this candle, you can see this candle really closed nicely to the upside and then followed up by this candle. What we did is we retraced into a fair value gap, this one right here. So you can see we made a tap in into that fair value gap, and after that fair value gap was inversed, what we can do is we can look for some more positions to the upside. So for example, we have a fair value gap right here. So let's see if it's going to get disrespected towards the upside. So for right now it is still not, and there it is. So we got the disrespect towards the upside, so we can maybe enter one more position, stop loss somewhere like this, and of course target the same target as the one before. And let's for example see what is going to play out, if it's actually going to play out, and there it is. So both positions are more than 2 risk to reward, and both played out perfectly. So we got the first scenario right here, we swept the bottom, after which we broke to the upside, came back, perfectly retested a fair value gap, and after that we disrespected this fair value gap, which is just resulting us to enter towards the upside, targeting this buy side liquidity right here that of course got us great profit. So this day we would make just under 5 risk to reward. So you can just see how huge profits can be with this model. Okay, so I don't want to make this video any longer because I don't want to confuse you, because all you need to do is go to the chart and practice doing this, and of course start applying it and start scaling with funded accounts. But before you do that, if you want my completely free playbook of this model, make sure to go down there in the description and claim it for completely free. Also, one more thing that I want to say to you is, if you would maybe like to get mentored by me one-on-one, make sure to go down there, check out the link in the description and see if there is any spots still left. And of course, if there still is, make sure to book a call so I can check if you are a right fit for the mentorship, because of course not everybody is accepted. So with all of that being said, make sure to like the video, subscribe to the channel, comment some questions if you have, and I'm gonna see you in the next one. Peace.